Hi again, this is Alex Rivkin, the CEO and founder of Rho Labs. We're a developer of Rho Protocol, the first non-custodial interest rates market on Arbitrage. In the previous couple of videos, we spoke about the overview of our interface and how to deposit your first margin and place the first trade. Now we'll look at what happens after the trade. We'll look at your P&L. We'll look at your position and how you can adjust your position, how you can close that position, what else you can do. And we will look at the margin management and talk through some basics of how we treat margin on Rho. So if you remember last time, here it is, we opened a position on the Binance BTC USDT perp funding market with June maturity, matures on the last Friday of the month of June. We opened a long position with a notional 20,000 USDT on 20x leverage. So I initially deposited $1,000 worth of collateral. Now, if you look here on the right, your current margin reduced slightly because of the fee that we paid, around about 1.2, 1.4 USDT, I think, fee we paid on this trade. There is also something called DV1, which is the fixed income version of data, which we will talk about a little bit later. And there is some small positive P&L on that trade with that we have accumulated already. So now, a couple of things we need to go through, right? We could also see the trade history screen here, right? And this is the last trade we've done on this account. The fee was actually 1.94 USDT, my apologies, but still like relatively small for the $20,000 trade. We traded at 12.4% rate. You can also see now on the screen, so I'll close that, just give us a little bit more space, and I will remove the floating rate so this one looks a little bit more fun. So now you can see the actual volatility of the fixed rate of our market rate. And you see that here is like 12.4% mark, this blue mark on the chart is your currently open position. Our liquidation rate is really far at like minus 40%, so we wouldn't be able to see it. But if the liquidation would be actually closer, for example, like let's say it would have been at like 7%, we would have another yellow line similar to this blue line, which shows you the liquidation rate, which is, I guess, quite helpful. So now we have this open position of 12.4 on the chart, and we also have the margin, right? So as discussed, we have a little bit less margin, so we spent 1.9 on the fee, and we made just under $1 on 1 USDT on the positive P&L. So now we're at like 9.98%. So this little arc here is very important to keep an eye on. So the couple of parameters you need to understand are initial margin requirement, which is the minimum amount of collateral we ask you to place for your given rate, for a given trade size. At a maximum leverage. So you see right now, we're at about 202 USDT. That is the minimum amount of collateral you need to keep in order not to be at kind of below the initial margin requirement and not get closer to the risk of liquidation. Right now, we traded on 20x leverage on the market, which allows you 90x plus. So if you look at the current shape of this arc, it's very green, which means you're well over collateralized, which is typically the right place to be. You always want to be a little bit or significantly above the initial margin requirement. The yellow segment here is basically the space between the initial margin requirement and the liquidation threshold, right? So what does it mean for us? If you fall below the initial margin requirement, for example, you traded at a maximum leverage and the market moves against you, but not very significantly, you will lose some money on the mark-to-market P&L basis. It's something we will discuss later. But you do not lose enough money to be at risk of liquidation, right? For example, right now, you could have traded with the same size with only $202, 202 USDT. In order to be at risk of liquidation, you need to go down to 101 USDT. So you need to lose 50% of your collateral, even at that 90x leverage, in order to be liquidated. If you remember when we were looking at that 90x leverage, that means that the market should move against you by about, I think, 11, 12%, right? We were looking at the liquidation rate of minus 1%, which is a significant move. And that would imply that you could have lost at a maximum leverage about 100 USDT on a market basis, and then you would be at risk of liquidation. Our recommendation is to try and keep always above the initial margin requirement. The reason we set it there is because we feel it's safe for you and your assets to always stay above that margin requirement. If you want to, if you're below margin requirement, we recommend topping up your collateral unless you expect the market to reverse soon enough, but typically it's a good idea not to wait for that. If you fall under the liquidation threshold, so in my case, if I lose a lot of money and I end up below 101 USDT, then my position can actually get liquidated. That's suboptimal. So again, recommendation is keep above the IMR in most of the cases, and definitely in all cases, keep your collateral above the liquidation threshold for the given position you're supporting. Going back to my position here, so let's imagine that, I know it's a very small P&L here, but let's imagine I actually made more money and I want to fix that trade. I want to fix my profit. So I basically want to close my position. How can I do that? The simplest way is basically to go to this trade request form, which, as you can see right now, it shows the current shape of the leverage that you have, right? So you're at 20,000 notional, and your current leverage in the position is 20x. That's what your slider shows here. Notice, by the way, that our current position now has just moved, and it moves with every trade on the market, right? The move was not very significant, and here we go, it moved again. So every time either the floating rate or this raw current rate moves, your P&L is getting adjusted, which is very important because we always want to understand what is your actual position. If you try to close this position now, what is the actual value of collateral that you have? And the value of your collateral, the value of your margin, always includes your initial deposit plus or minus the accumulated P&L. So if I want to place an unwinding trade, the simplest way is just click the 0x here, and you will end up, we will basically pre-fill the form for you, showing that you will have to short 20,000 notional as initially long 20,000 notional. And you can see here, it's basically changing live. So if I, for example, start pulling the slider, you can see how that changes at the bottom panel. The direction of the trade changes and all the other parameters. But if I go back to the 0x, my direction goes from long to none because I'm closing the position. The notional is going to be 0, leverage is going to be 0, DV1 is going to be 0, and I'm going to close the position, right? So for example, right now, if I press trade and do that, my position is closed, or will be closed in a second. Boom, you see that the position disappeared. I actually lost a little bit of money because of the fees, right? Because we only accumulated 0.7% P&L, or 0.7 USDT P&L.